Welcome back to the episode 6 of how to train market maker models. In this video I will talk about time frame alignment. So for the summary of the video, I'm going to first explain how to use time frame alignment, basically which high time frame goes with which lower time frame, how we are going to use this concept with market maker models, and at the end I'm going to show you some live examples on the market. These are the time frame that you are going to pair together, so weekly H4, daily H1, H4 M15, H1 M5, and M15 M1. So basically, when we will be looking for a market maker model, we will wait for price to reach into a PD array on the time frame on the left, and we will look for entries on the time frame on the right. So imagine that you are, bullish on the weekly time frame. Every time that price will come down into a PD array on the daily, you will then drop down to the H1 time frame to look for a market maker model in H1, so an entry on the 1 hour time frame. For the first example, we are here on USD CAD. So with my analysis, I wanted to see lower USD CAD. So my weekly daily bias was bearish. We can see here that price created a range, so from range high to range low, we went back up into internal range liquidity, took out external, and if we drop down to the 4 hour time frame, low stop run here, price creates another range from range high to range low. Okay, so range high to range low here, price left a fair value gap here. And now, what did I tell you just before? When we have a 4 hour internal range liquidity, so a PD array in the 4 hour time frame, we will look for a market maker sell model in M15. So we drop down to the M15 time frame, right? And we can see, remember, I'm going to draw it here. So we have internal and we have external here. So this will be our target. So if I drop down to the 15-minute time frame, basically look how clean price is on the 15-minute time frame. That's why we use time frame alignment, and that's why when we have a 4 hour PV array, we drop down to the M15, right? So look, one FVG here, really clean, another one just below it, right there, okay, a last one here, and see basically how the price action is clean on the 15-minute time frame, right? And to explain and to show you, to make you understand why we do this, look at how the M5 is compared to the M15. It's a lot messier, you have a lot more candles, and if you're a beginner, this can be a little overwhelming. So that's why when we have a 4 hour PD array, so an internal range liquidity, we go to the M15 time frame. Now for the second example, we have a range here from range high to range low. Okay, so we are on CHF-JPY. Price created a fair value gap, a weekly fair value gap, so internal, and we have external here, so that's going to be our target. And when we have a weekly fair value gap, we drop down to a 4 hour time frame to look for a market maker model. On the 4 hour, look at how the price action is, so really clean. You have first this total soup here, first fair value gap, and if we zoom a bit, you can see how every time price tries to go below the fair value gap, we either close above or close inside the fair value gap, that's a sign that price is bullish. Another fair value gap right there, another one right here. Yeah, basically it's really clean and simple. And if you take a look at the H1, for example, you have a lot more PD arrays. Can be a little bit overwhelming for you if you're a beginner, so that's why we use time frame alignment to basically make our life easier, right? That's it for today's video. If you guys learned something new, make sure to leave a like, subscribe to the channel, write a comment down below, and I will see you for the next episode.